Let's talk loan process from pre-qualification all the way to closing. I feel like a lot of people it's a very overwhelming process. So I think having a resource and being able to go watch this video, hopefully by the end you have a better grasp of what that looks like. Because I think, by the end of the transaction, people are usually very happy and kind of forget all the nitty gritty as we go through that. So I hope you get some questions answered when we're done with this video. And if for some reason you have any more questions or you would like to work on a pre-qualification or pre-approval, please feel free to reach out. My name is Carrie Haynes. I'm with Movement Mortgage. My location is Kirkland, Washington, so the greater Seattle area. I am licensed in other states, and within my branch in my office, I have partners that I work with in almost every state. So if it's not a state that I specifically serve, I do have resources for you. So I would love to help you navigate the sometimes confusing and complex process of purchasing a home. So let's get started. First thing we're going to do is a call, and that's going to be your pre-qualification call. So on that call, we're going to go over the rough numbers. This is just me asking you questions about your income, your assets, all your debts, reviewing fees, getting to a rough number of about what your max purchasing power could be. Now, once we're done with that, we've answered all your questions. I've walked you through a rough estimation of what the process looks like. We are going to then send you a copy of the estimate and your pre-qualification, as well as all the information you need to start your application. So starting your application is the first step to finalizing your pre-approval. When we send that over, it will walk you through all the steps and it will have you upload any documentation that we need, or at least the first round of documentation that we need so we can get the process started. I always like to mention for people, we do start with a soft credit pull. I think that can be a deterrent for some people because the misconception about having your credit pulled is that it's usually this big hit to your credit. Now, unless you're someone that's been shopping for a lot of different credit, let's say you're shopping for a car or you're using, you know, uh, the pay now or buy now, pay later programs or anything like that, when you're using a lot of credit and your credit's been pulled multiple times, that is when it can affect your credit a little bit more significantly. But if you're not someone that's having your credit pulled a lot and you're going into shop for a mortgage, typically their credit bureaus are saying it's anywhere from 2 to 5 points decrease that you can see in your overall credit score. So I don't want that to deter people from moving forward and finishing their pre-approval. But what we do at first is we do a soft credit pull. So there's no hit to your credit when we do that, and it pulls from one bureau. So it gives us it kind of like pulls up the hood a little bit, gives us a little bit of an idea of what's going on. So we can work off that to make sure that the numbers make sense. I know that, some people are just, it's kind of an exploration thing. They're maybe not quite ready to buy, but you want to know about what those numbers are going to look like. So once we know that it makes sense, the numbers are making sense, you're feeling confident, we're then going to go in and do that hard credit pull. So when we do the hard credit pull, we've got all your documents. We are then going to issue your pre-approval. So once we've issued your pre-approval, we will set up a call to go over all of the numbers. So I'm going to make sure that you understand. We're going to talk about from what you feel comfortable with as far as your monthly payment being to what your actual max amount purchase price is. We walk through all the scenarios, talk about interest rates. Where are they now? Are they fluctuating? What's the market looking like? Walk through all of that. I want you to fully understand what these numbers are and how we got to the number that we got to. So once we've issued your pre-approval, some people come to us and they already have a real estate agent. It's either a partner that we already work with or someone that they know. I personally believe that the first step is working with us as the lender. So coming to us first. If you do not have an agent, we have a book of preferred agents that we work with, that we've worked with time and time again. They are trusted, they know what they're doing, they are on wonderful teams, and we have that firsthand experience. So if you don't have an agent or you would like to explore a different option, we can then set you up with maybe someone that's in your area that's, a top producer, or it might be a personality specific kind of connection. And we also have multiple people we can connect you with. I think it's a good idea to interview people. Sometimes this process can take anywhere from, I have some people that get pre-approved and they are under contract in a week. Some people, this can take 9, 12 months, even longer. So you want to make sure you're working with someone that you're really comfortable with and that you trust and that we know that we can work really well with as well. So once you've picked your agent, you've gone through all the numbers, your agent understands what your financing looks like, you're then going to go out and go shopping. So this is the fun part. Sometimes, like I said, some people it happens really quick. Other people are searching for quite a while. It's just dependent on what market you're in and, the specifics of what home you're looking for. So you've done your search and now it's time. You found a house and it's time to write an offer. So before you go in and write the offer, we're going to get on a strategy call with you, your family, and the agent and your agent, whoever you choose. And we're going to go over all the numbers. What does it look like? If it's a competitive situation, what contingencies do you need to go in or not go in with? What do you need to waive as far as contingencies? If we need something like an escalation is, let's say you go in at the purchase price is $525,000, but you're willing to go up to maybe, let's say, $550,000. So you have what's called an escalation clause in there. So if other offers are coming in and they're beating out that original price, your offer will continue to escalate until you win above the other offers. So we strategize all of that. We look at your down payment. What does that structure look like? Do we have room to restructure if we need to as we're going through the process? Fully make sure that you understand what that payment is going to be. And yes, things can fluctuate here and there depending on taxes and insurance. And we come up with that strategy. So then you submit your offer. And once you submit your offer, I'm then going to call the listing agent. So the agent that is helping the seller, I'm going to call them and walk through your finances. I'm never telling them any personal information, but I'm going to walk through how solid your financing is. I want them to know that they're working with me and my team, and we have the expertise and we're available. And I also want them to feel comfortable with the agent you're working with and also your financing all around. So we review things like how your credit score looks. Not that it's none of the personal information. I'm not necessarily giving them that exact number, but we're walking through all of those things. What your down payment amount is. Do we have room to restructure if we need to? So all of those things that strengthen your offer, and them just getting to know me, because the lender you're working with is very important. I think that can get lost sometimes. People will assume that all lenders are the same and that the lowest rate is always the best, but the lowest rate can actually cost you quite a bit. If you're working with someone that isn't properly managing from contract to close as far as a lender goes, you're risking a lot. You've got your earnest money on the line. There's a lot of things that can happen, and we want to protect you as much as possible. So you've submitted your offer and your offer is accepted. First thing that's going to happen is you're going to get this inspection scheduled if there was not a pre-inspection. So that can usually take, sometimes it'll be a day to, depending on what market you're in. The market that we're in, most homes are pre-inspected. So you would essentially go in and waive the inspection unless you wanted an additional inspection of your own. So let's say the inspection is waived and you've waived that. There's already a pre-inspection. Everything looks great on the house. Typically, you will then have about 2 to 3 days, sometimes longer, to deposit what we call your earnest money with escrow. So your earnest money is exactly that. It's kind of a deposit showing the seller that you're serious about purchasing the house. You're wanting to move forward and you're willing to take the steps needed to continue from contract all the way to close. So escrow, the easiest way to explain escrow is they are the bank, kind of. They are the bank that is going to handle all the money throughout the transaction. So they're going to hold on to your earnest money deposit. And most of the time that's refundable. Not always. Sometimes people will release that earnest money and then it's non-refundable. If you're waiving financing, there's some other things that we can talk about depending on how we need to strengthen your offer. But let's say in the case that is refundable, if something were to happen, let's say with your financing and you haven't waived financing, so something happens, you could and you would get that earnest money back. So that's going to be a client specific and a contract specific situation, but it most of the time, unless you're waiving that, which you will know what that means if you're waiving it, or if that is non-refundable. But other than that, typically you can get that back if something were to happen throughout the process. So you've deposited your earnest money. Then we're going to talk about locking your rate. It really depends on the market. Sometimes it makes a lot of sense to float because we have indicators coming out and news coming out that could really positively impact. So we're going to go over the pros and the cons of floating, locking. What does that look like? Are you paying points? Are you not paying points? Paying a point is basically what that means is you are paying a lump sum for a lower interest rate. So some programs and depending on what your loan file looks like, you may have to pay a point regardless. Other times it can be a choice. So we walk through all of that. So let's say you lock in your rate. Your rate is locked in. That essentially what we call triggers your loan. So once your loan is triggered, that will then give us 3 days to get your initial disclosures ready for you to sign. So once those disclosures go out, those are going to go over rough estimates of what your fees are, what your monthly payment is, all of that. When we're looking at the initial disclosures, by signing these initial disclosures, you're not committing to necessarily anything. It's us having to show you as the lender, this is what could happen. We have thresholds to stay within, and we have tolerance levels that cannot increase a certain amount. So when you're going through that, know that some of those may change. They're never going to go increase drastically, but they could come down a little bit. So you've signed those, earnest money's been deposited, offer accepted, all is good there. And now once your disclosures are signed, we can then order your appraisal. So your appraisal is going to basically make sure that what you're purchasing the home for in your loan amount, that's going to cover, the home is appraising for that value. If for some reason the appraisal comes in low, we would need to restructure your loan to make sure that you were covered as far as what your loan amount could be in correlation to your appraisal. So we'll order the appraisal. Sometimes we can rush that if we need to. It depends on the situation. So of like a VA appraisal, we cannot rush at all. There's no rushing that. They have a certain set amount of time. So we need to be cognitive of that when we're making offers and walking through that process. Something like a conventional loan, we can, for a fee, you can rush that appraisal. So it's going to depend on when your closing date is. So we definitely discuss all of that as we're going through that offer prep. From there, we're then going to start packaging up your loan file. So we're going to start collecting some other additional loan documents. Depending on how long it's been, we may need all new updated documents. It really is just how long ago did we do your pre-approval? Are those documents still relevant? If they aren't, we just need those updated documents. We'll probably add more documents that will be needed to package up the loan file. Once we have those, we're going to package it up and we're going to send it for its initial underwrite. So when it goes to the underwriter is the person that makes the credit decision. So they're going to be looking at all of the mortgage guides, and they're going to essentially at the end of the loan give that stamp of approval that this meets all of the guidelines. You as the consumer is able to repay this loan, fits within the guidelines. So that's ultimately what the underwriter is. So the underwriter is going to look at that. After the first underwrite, they will come out with what we call conditions. So they're going to come out with conditions, and those are just going to be additional documentation or clarification that they need. So once we get those out, we're going to start working on all of those conditions. I think sometimes what happens is we do the initial underwrite and we get those conditions that come back and people freak out because they're like, well, why do they want more information? Is there something wrong with my loan file? And that's just not the case. It takes a few rounds of underwriting, and 95% of the time, the underwriter is going to come out of that first round, even sometimes that second round, and ask for additional information. So once that's come out of underwriting, we're going to make sure we can we're going to start to collect those additional documents that they're wanting and work through to get ready for that final approval and submitting that for that final underwrite. In this time, I'm going to make sure that you are connected with a homeowner's agent, an insurance agent. So I have multiple insurance agents that I work with that are fantastic. They will get you the best rate possible that they can do within their company. And then you can also shop around too. A lot of times you're going to save a significant amount of money with current insurance issues and how insurance premiums have increased. You're going to save money if you're bundling those. So I do think it's very important to shop around for those services because it really can make an impact on your monthly payment overall. So once we have your insurance and everything, the appraisal has come back, everything looks good, we're going to package all of that up again, and we're going to send your loan file in for that final underwrite. It's going to come out of that final underwrite, and it's going to, if they don't need any more information, they don't need any additional documentation, we've satisfied all the conditions, they're going to give us what is called the clear to close. So with the clear to close, we're going to then take all of the loan file and we're going to package it up and send it to escrow. So remember, escrow is the bank that kind of handles the end of the transaction. So we package those up, send them to escrow, and escrow gets all of them prepared. And then escrow is going to reach out to you and set up your signing appointment. So that's when you're going to go through all of the, you're going to sit down either with a mobile notary or in person at the office and sign all of your loan documents. Let's back up just a little bit. So right before we get the clear to close, you're going to get, first, you're going to get your estimated closing disclosure because we have to wait 3 days after that's acknowledged and signed before you can actually sign your loan documents. And then a day or two later after that, you're then going to get your actual closing disclosure, which is it's going to reference your initial disclosures and your closing disclosures and make sure we're within those tolerance levels. And that's going to show you those exact fees and costs and everything associated as you get to escrow. So once we're past that, clear to close, we're at escrow. You're going to set up your signing appointment. Like I said, you can sign in office or you can have a mobile notary. There is an additional charge when you have a mobile notary. It really depends on what market you're in. A lot of people use a mobile notary because they'll come to you. When I signed my loan documents, they came to my work years ago. So it's really convenient because sometimes we are in a rush situation. So you're going to sign all of your documents, and then escrow is going to make sure everything's properly signed, and they're then going to package that up, give it their stamp of approval, and they're going to release all the funds. So from my company, we're going to send funds to escrow, and then from there, escrow is going to pay off they're going to pay off the old mortgage. They're going to pull all the funds from your account for your down payment and closing costs. They're going to make sure that everyone is getting paid. So once those funds are distributed where they go, we are then going to wait for what is called the recording numbers. So once the recording numbers are received, that officially means that the home is yours. It's been recorded and it is yours. So that is when you get to get your keys. So there's a couple things to remember in the end, and myself and your agent will review this with you. So sometimes you can close and not necessarily take possession right away. Let's say that the seller is doing a rent back where they're renting the house back from you for a few days, or you need a day or two because they need to move things out or whatnot. So that's something to talk about as we get to the end of when is possession and when is closing. But let's say that you close and you take possession on the same day. Hopefully that evening you get the keys from your agent and the home is officially yours and you get to start moving in. Now, this is of course a very rough overview, but it at least gives you an idea and kind of the flow of what happens as you're going through the process. So if you have any questions or you want to get pre-approved or pre-qualified, please reach out. We would love to help you, and we're always a resource. Feel free to subscribe or share this video with anyone who's currently going through the process or anticipates to go through the process soon.